Artificial intelligence is being built at a scale that we've never seen before. Companies are spending hundreds of billions of dollars on AI infrastructure, and new AI factories are being announced across the United States and the world. But before an AI model can be trained, before a data center can go live, and before thousands of GPUs can begin working together, somebody has to assemble the racks. They have to integrate the servers, configure the systems, and test everything to make sure it works. And as AI clusters become larger and more complex, this process is becoming increasingly important. Today, we're looking at a small company that sits in the middle of that process, TSS Inc. So you have the GPUs, the NVIDIA GPUs. This is the powerhouse that does the work. And then the AI servers, as all the GPUs have to come together inside the servers. And then you stack the racks. Servers are integrated into racks. And then they're all integrated into the AI factory as racks scale into massive AI factories. So you have hundreds of thousands of GPUs per factory, billions invested in the AI factory built for the future. So most investors are familiar with NVIDIA. Many investors know companies like Dell or Supermicro, but there's another layer within the AI infrastructure supply chain that receives far less attention. So think about it this way. NVIDIA builds the engines, Dell and Supermicro build the vehicles, but somebody still has to assemble the fleet and get it on the road. Thousands of GPUs have to be integrated, tested, configured, and deployed before they can become operational AI clusters. That is where TSS operates. The company isn't manufacturing servers, it specializes in helping deploy AI infrastructure. So NVIDIA, they make the GPUs or the chips. Dell and Supermicro, they build the servers. TSSI is the rack integration and development, deployment. They integrate and deploy. And then you have the AI factories, the operational cluster, hundreds of thousands of GPUs cluster, and the AI factory is ready to train AI. TSSI is the missing link that turns the hardware into operational AI factories. TSSI specializes in rack integration, system assembly, testing, deployment, and infrastructure services. The company helps customers transform complex AI hardware into operational systems that can be deployed inside data centers. Think of it as one of the companies helping bridge the gap between receiving hardware and operating as an AI factory. As AI deployments become larger and more sophisticated, management believes demand for these services will continue to increase. TSS is not required for every data center project. However, its niche appears to be growing as AI infrastructure becomes larger and more complex. So you have the NVIDIA chips, the raw hardware, and then TSSI integrates, assembles, tests, and deploys into the AI racks ready for deployment in the AI factories. TSSI is the company in between. We bridge the gap between components and AI infrastructure. Now, a traditional data center from several years ago looks very different from today's AI factories. Modern AI deployments involve massive GPU clusters, high density racks, advanced liquid cooling, more power consumption, more deployment complexity. And as complexity increases, specialized integration companies may become more valuable. This appears to be one reason why TSSI continues investing in additional capacity and infrastructure. The company believes AI deployments are becoming larger, more complicated, and more demanding. If that trend continues, demand for integration services could grow along with it. So a 2020 data center only had 100 GPUs or so, had lower density, air cooling, simpler deployments, copper wiring for networking, weeks to deploy. And then you have a 2026 AI factory. You have hundreds of thousands of GPUs, ultra high density, liquid cooling, fiber optics, complex integration, and months to deploy. AI factories are massive, complex, and hard to deploy. And that's why specialized integration partners like TSSI matter. So what does TSS Total Site Solutions do? They deliver integration services powering data centers, AI, and digital transformation. Technology service offerings are rack and systems integration, procurement, deployment and configuration management, modular data center. Their strengths are flexibility and speed, partnering and execution, simplifying the complex, quality, innovative solutions. And then their customer benefits from reduced complexity, faster time to value, certainty, and superior customer service. Management described 2025 as a transformative year for the business. Revenue increased from approximately $148 million to nearly $246 million. Adjusted EBITDA increased from approximately $10 million to $18.6 million. Net income rose from approximately $6 million to over $15 million. The company also ended the year with over $85 million in unrestricted cash. These results suggest TSS is not only growing, but also becoming more profitable. Management believes investments made over the past several years are beginning to pay off. So you have record revenue, record profitability at record scale. One of the most important developments occurred when TSS announced an extension and expansion of its agreement with its largest customer, and the customer was undisclosed. The company does not publicly identify that customer. However, management described the agreement as a validation of execution and an important part of the growth strategy. The extension provides longer-term visibility, additional infrastructure support, greater confidence in future growth. Management also noted that additional fixed power costs are now covered around the updated agreement. And for a company operating in a rapidly growing industry, visibility matters. So you have their undisclosed largest customer, which is a mission critical relationship on a multi-year extension. You have the extended term, stronger commitment, validation, execution, greater visibility into future demand, more AI rack deployments, more racks, more capacity, more deployments, continued growth opportunity, supports the future growth. Power cost covered, investment supported, scales with demand, builds the foundation for what's next. Management calls it a validation of execution, improved visibility into future demand, stronger foundation for long-term growth, and customer trust, longer term, more confidence. Is a stronger partnership today, more visibility tomorrow, and continued growth ahead. So management has stated that the fourth quarter rack volumes nearly exceeded what the company completed during the first 3 quarters combined, which is very important. That's a significant acceleration. Even more interesting, management stated they expect to double the business during 2026. And those are ambitious expectations. As AI infrastructure deployments continue accelerating, TSS could be positioned directly in the middle of that growth. The company's largest partner reportedly expects AI infrastructure deployments to double in 2026. If that happens, TSS may benefit from increased rack integration demand. So you have 2025 rack volume, rapid acceleration through the year. Q4 nearly exceeded all the other quarters combined. The AI infrastructure boom, 2026 outlook is double what management expects business to double. AI factory growth, more data centers, more capacity, more rack deployments, more integration demand. Daryl Dewan, CEO of TSI, said, "Our expectation for the calendar year 2026 is that we will double the business what we did in 2025. So the company is not standing still in 2026. They plan to invest approximately $17 million in capital expenditures through 2026. These investments are focused on advanced AI racks, additional integration capacity, next generation cooling requirements, future AI infrastructure projects. Management appears to be preparing for larger and more sophisticated deployments. The goal is to position the company for the next phase of AI infrastructure growth." So today, they're growing AI infrastructure, strong execution, building momentum, 2025 performance, $17 million investment plan through 2026, more capacity, more deployments, accelerated growth, build to capture the next wave of AI infrastructure demand. Advanced AI racks, higher density systems to support the next generation AI workloads, liquid cooling, next generation cooling for higher performance and efficiency and more capacity, expanding our facilities to be ready for future growth. 2026, more AI racks, next generation cooling, and capacity expansion. Investing 17 million today to deliver greater value for tomorrow. So, what is the bull case? It's actually relatively simple. AI infrastructure spending continues to grow, more GPUs are shipped, more servers are deployed, more racks require integration, more AI clusters are built. TSS sits directly within that workflow. And management currently forecasts adjusted EBITDA between 20 million to 22 million during 2026. Increasingly, management described this forecast as conservative. As AI deployments accelerate faster than expected, growth could exceed current projections. So today's TSI, small cap, undervalued, early innings, AI integration, critical rack solutions, hard to replicate, growing demand, AI rack deployments accelerating. Management forecast for 2026 is $20 to $22 million, which is conservative guidance. Potential futures, more AI deployments, more factories, more demand, more rack integration, more revenue, larger scale, stronger growth, and more EBITDA operation leverage, higher profitability. As AI spending increases, more GPUs are shipped, more AI servers are built, more AI racks are needed, more integration demand. AI growth drives infrastructure, infrastructure drives TSI, more deployments, more integration, and more value. As always, there are risks. TSS faces several challenges. First, you have customer concentration remains significant. Second, memory shortages and supply chain disruptions could impact deployment schedules. Third is project timing, which can be unpredictable. And finally, rapid growth always introduces execution risk. Investors should carefully monitor these factors moving forward. So TSS, which is trading at $12.40 at the moment, isn't competing with NVIDIA. It's not trying to become a Dell. It's the company that occupies a niche within the AI infrastructure buildout. As AI factories become larger and more complex, the need for integration, deployment, and infrastructure services may continue to increase. The market often focuses on the companies making the chips, but sometimes the most interesting opportunities are found among the companies helping turn those chips into operational AI factories. And TSSI may become one of those companies. TSSI has advanced over 10% this month despite recent volatility. Upward momentum is driven by significant shift towards high margin AI systems. Integration in bullish 2026 EBITDA outlooks, analysts project a potential rally towards a $17 consensus price target as operational scaling at the Georgetown facility continues through the next quarter. The bullish is explosive AI integration revenue growth. System integration revenue surged approximately 88% year over year in the first quarter of 2026, reflects a strategic shift towards higher margin AI infrastructure services, which now represents a larger portion of the revenue mix compared to the previous year. The bearish is decline in procurement services revenue. Total revenue fell approximately 44% year over year in Q1 2026, primarily due to 56% decline in procurement revenue. Management characterized this as a return to normalized levels, but the sharp drop significantly impacted the top line. And if you enjoyed this video, consider joining the membership at buymeacoffee.com, where I share additional research, portfolio updates, under the radar AI investment infrastructure opportunities. And as always, this video is for informational and educational purposes only, not financial advice. And appreciate y'all watching. See y'all in the next one.